What is going on, guys? Welcome back to another weekly outlook. In the past previous videos, I've kind of died down on the weekly outlooks, but this is it's gonna be a video just talking about what I'm thinking in the market, what my charts look like on a Sunday afternoon before market opens on Monday. We're going to be taking a look at the news. We're going to be taking a look at NQ, SPX, and we're going to start off with DXY because something happened on DXY on Friday, and I want to talk about it. If you guys were trading on Friday, you'd know that NQ and SPX were extremely bullish, and I mean extremely bullish. We had probably like a very good spike up. And I'll talk about that in a second. But what you expect to see on DXY would be the exact opposite. Now we're on the daily chart here on SPX or on DXY, my bad. And something interesting just happened. We can delete this weekly order block because you can see it just didn't get respected at all. But we have this accumulation that has been happening for quite a few days here, and this is reflected on NQ and all that. Again, just to remind you on DXY, we had this daily market structure shift down here with that swing low, that swing high, and that market structure shift, and a standard deviation lining up quite perfectly with this monthly SIBI. Now, I'm expecting, and I think everyone else is expecting, price to trade up into this monthly SIBI. And obviously, this lines up with the standard deviation. The profit taking should happen in this area, so I marked it out with a gray box, as you can see here. We also have equal highs buy side liquidity that I'm watching up here, which also lines up with the low of this monthly SIBI. So that's two confluences here to sell. And the other thing is we might actually be doing a smart money reversal or, a power of three reversal. So this would be the accumulation phase. And now we're entering the, what's it called, manipulation phase. As you can see, the manipulation phase, I'm hoping, is ending up in this gray box. Maybe not all the way up to the negative 2.5. Maybe it's the consequent encroachment. Who knows? I don't know. I mean, there is a daily SIBI here that needs to be filled. So maybe we can trade up all the way. Maybe we can. Okay. And that's fair. That's fair assumptions. What I'm watching, though, is watching price manipulate up in these levels, obviously sweeping out this buy side liquidity, obviously sweeping out this standard deviation legs. This box we can get rid of here. And obviously being able to trade in this monthly bearish SIBI. Now, what does this mean for DXY? This means that if DXY goes up in this manipulation, so you would be like seeing something like this. I'll change the color, right? And then you'd have like distribution, for example. Just make it green. Let's make it green. There you go. You'd have something like this. It might be a little higher, not gonna lie, right? That's what it would look like. So if DXY goes up, what happens to NQ? Let's look. NQ, oh yeah, there's a lot. Let's go to the 1 hour. All right. NQ basically, I want NQ to go down a little bit into its range that it created. Again, this was Thursday, so this is the big move on Thursday. And then Friday on NQ almost hit the buy side. As you can see here, we hit the negative 3.5 standard deviation leg. On the daily, we created more buy side liquidity up here to reach 4. That's definitely a target. We are so close to it. And then on the 1 hourly with the FOMC move that happened on Wednesday, we created I'm going to call this a very bullish market structure shift. And the only reason for that is this high got broken by this one singular candle on Thursday at 4 p.m. I'm not too sure what happened at 4 p.m., but if you were there and you know what happened. But it created a very strong bullish market structure shift. You mark the standard deviation from this leg here, and you can see that the price targets are not super, I want to say not super equal, but they're not super lined up with the price targets I currently have. Luckily, what is good though is it already hit the negative 1 of this standard deviation leg. So it already shows that the distribution or the distribution up, bullish, the bullish distribution has already happened. Okay. Now, there's two things that could happen here. Three, kind of. The first thing is it hits the negative 1 and it comes all the way back down, right? And if I were to take a trade, you do the OT, right? You do this, or you fucking boom. Oh, it'd come down to the OT, blah, blah, blah. While that is probable, and it probably wants to do that, or maybe it will, or who knows. What I'm watching for NQ, and knowing that NQ is volatile, and I'm not expecting NQ to respect everything that I'm drawing in aftermarket or pre-market, I am looking for NQ to come down a little bit to then take out this buy side liquidity, right, which is up here above this swept 3.5. Take out this buy side liquidity. I'll mark it out a little bit. And then from here, it does something where it creates new all-time highs, and it really pushes price past this negative 1.5, and I'm looking for a new target at the -2 standard deviation. This would make it right above consequent encroachment of like this whole range between this buy side and the ultimate target of the -4 standard deviation. And I'll talk about NQ for a little bit more, but you can see that when NQ comes down, and we'll go to the 3 hour because this is where I have the fair value gap. I was looking for either a fair value gap or the consequent encroachment, which is here the -1.5 or the 0.5 equilibrium from this swing low to that swing high. I did this on the 1 hour, so it looks weird on the 3 hour. But you can notice the reason why I did this is because this fair value gap here, see price reacts off of this. I'm pretty sure there's a breaker here there's a breaker off this bullish, whatever. So this is a valid price reaction, right? Hence why this range, this new range that gets created from the swing low to the swing high on the 1 hour is a valid range, right? Look at the dots, right? They're lined up. Only problem is on NQ, there is no imbalances under the discount. So that means that when price would eventually or hopefully trade in the discount area, it wouldn't have anything to trade to. It doesn't have anything to trade to, right? So if that makes sense to you, that means that we'd have to reach for something, most likely a fair value gap if it wants to rebalance after its huge run up. The only fair value gap I was able to find, and we're doing this on the 1 hour and above, so 1 hour nothing. Let's look at the 2 hour. Okay, there's a 2 hour fair value gap here. Look at this. Fine, you can do that. 3 hour, there's one a little more. This one I like a little more because it's more precise. Hence why, listen, if this gets broken through, it gets broken through. And we'll do analysis again, right? Right now, what I said, even in my analysis, I said that I would like to see price trade down into discount, not hit anything. I don't want it to hit any like particular spot. I just want it to trade down into discount and then close and then trade back up. So the low would be here, and then it would trade back up into this fair value gap, either close in this fair value gap or above. What would that show me? That means that the sellers went all the way down over here. Let me visualize, right? All the way down here. Then they bought over here because they're in discount. They buy everything. They buy the candle back up to close here or higher. Okay. Close here or higher. What does this do? This means that the open would be here, the low would be here, and then the close would be here. That means it's a doji, almost like a doji. You're learning. That's what I'm looking for. Let's go to SPX. Show you what I'm thinking here. So SPX has done also something very good for bullish price action. As you can see, the daily standard deviation here lined up with all the levels I have marked right here. Now, what's impressive is SPX has already taken out the -4 ultimate like profit taking target, -4 standard deviation leg. I'm not sure why there's buy side liquidity, but I'll delete that. What's most important is the consequent encroachment of the -4 and -4.5 range. The -4.25. Look at this level, this little line here on the daily. Look what happens on Friday. We trade all the way up to it. Boop. And we tap it at 3 p.m. Now, let me pull up something that I mentioned in my analysis. I said SPX just hit the -4 daily standard deviation leg. Next target is next target is 4974.4. Okay. That's if we don't go down with NFP. NFP went down and then went back up. You can see it hit. Wait, what was the target again? What was the target? 4974.4. 79. Wait, what? No, 49. 4974. 4974. Boom. Right there. Hit like a beauty. Now, the cool thing about this and the cool thing about price action is you can tell that it sold off really quickly. That means that the standard deviation was correct. And that means that there was profit takers that took their positions right when price hit that level. Again, we're at 3 p.m. So this still has 1 hour to take its profit. So everyone, live markets, everyone took their profits here. Everyone had the standard deviation leg here. Which means one thing. That means if price action is showing bearish price action, blah, 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 it's going down. Okay? It's going down. The only way, in my eyes, not in everybody else's eyes, the only way it can go back up would either be with an SMT with NQ, so that means that NQ gets to its levels first, or it creates the SMT and SPX goes down into discount. And in discount, there are 3 things just on the 1 hour. 2 things, my bad. I thought this was a fair leg up here. No, 2 things. First of all, why a balanced price range? You might say, French, all I'm seeing is this fair value gap. Why not target that? Okay, good question. Why I love balanced price range is a whole different question. But when you can notice one, and I'll just mark the area that it's in, right? When you notice this, it's going to change your trading by 1,000%. You see this bearish down move. This was NFP at 8 a.m., right? Big move. We bought everything and above back in 4 hours. This fair value gap got completely, and I mean completely, disrespected by this singular candle. You understand? This fair value gap was from this low to this high. So theoretically, to be not disrespected, this hourly candle would have to trade inside. Quick lesson here. Price would have to do something like this on the hourly candle. Come up here, trade here, maybe do this, something like this. That's fine because it reacted to this fair value gap. But look what it did. It, from this high to this low, price opened down here and it closed above, completely disrespecting this array. What does that do? That means that it leaves, and it also leaves a fair value gap itself. A bullish fair value gap that disrespected a bearish fair value gap. What do we call that? A balanced price range. You got it. Now, why are these so important? Because there's a lot of orders to be filled. What's cool about this is when we draw the middle line or whatever, the consequent encroachment, if price, and I mean if, this is like the if is like really amplified, if price would want to come down, boom, trades under the discount. As you can see, there's some lows here. And the biggest low is this one. You see this little low? It's right before consequent encroachment. So that means all price needs to do is come down, trade into it, sweep this low, and it can do 2 things. Sweep it, because it's already under discount and it's in the balanced price range. Or it can sweep it and then come right into the consequent encroachment, create a buy model, and then we come all the way back up. Okay? The last thing I'd want to see, obviously, is get this balanced price range disrespected. This would be the, like, what's called the last line of defense for bullish bias. Again, we can change our bias like throughout the day. If we see that, you know, a bullish PD array is not getting respected, we can look for bearish PD arrays with a bearish order flow, and we have to make sure that it's correct. That's it, right? So that's the move on SPX. Let's just review what I just said, right, on SPX. Oh yeah, and we're trading every day. There's news on Monday. There's ISM. Oh yeah, let's look at the news. My bad. Okay, let's bring this up. Sunday, well, actually, in about 40 minutes or so, Mr. Powell is going to speak, so I'm going to watch that. I wonder what, I don't think it's going to have a big effect, but I might fucking jinx it, so who knows. Monday, 10 a.m. we have ISM services. Not really so big of a deal. It is at 10 a.m. though, so I'm not liking that date at all. We'll see. We could probably trade pre-market. Tuesday, no news. Wednesday, no news. Although there is news, and this is like a news, but it's not big. There's just FOMC members speaking. Members, and then this is the big one I'm watching. So 10-year bond action, I'm not going to be trading at 101 whatsoever. And then Thursday, we have unemployment claims, and then we have the 30-year bond action. So that's also, Thursday might be a little volatile day where I don't trade pre-market and I also don't trade after lunch. So it might just be from like 10 to like 12. That'd be like the only time I can trade, but we'll see. So that's really about it for this week. I like to keep it simple, right? The simpler, the better. Clear chart, clear mind. So I would like to have as less as possible just to really know what's going on. Currently, this is what the order flow is showing me. This is currently what I understand and what I'm showing you. These are my thoughts. That's my analysis, right? I hope you guys have a good week, and I'll see you guys soon. Peace.